stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey, everybody. I wouldn't say happy Monday, but it's Monday. It's like the market just doesn't take a break. Last week felt like a little bit of a breather, quiet on the narrative front. Markets today, not so much. It's like, well, get a little bit of time just to not think about the markets over a holiday weekend, and here we are just dumping further to the downside. No major pressing news that I could see other than it's just kind of the path of least resistance. I'd shared some charts. I think that on the technical front, there's still a lot of noise, but I think what's crazy is the fact that we had like a 12 to 13% candle or move rather from this low to high. That's a 13.37% move. That gives this market a lot of wiggle room just to fluctuate. Like this could be all noise, but today we're down 2% in the S&P, we're down 2.5% in the Nasdaq, we're down almost 2% in the Dow, we're down 1.5% in Russell. That's all in the context of this big swing from the low on April 7th to the high on that Wednesday. We have not hit the highs. Now, I still think if you give this market some time, either this level is going to offer up some, let me use a straight line here. I think this level will offer up some potential support. And if we fill, basically we're kind of, slowly, orderly backfilling the Wednesday candle. Right, that big rip on Wednesday with the announcement, the 90-day pause. Well, the markets ran with it that particular day, pulled back halfway, retested the high and failed. And here we are, like I said, just kind of backfilling that candle. So between around 51.25 and 5100, don't be shocked to see price get there. Now, I'm looking at a trade this morning. Let me see here. Looks like my live on both. Nope. See if this will push. Maybe. All right. Anyway, I'm going to see if price can get to 5100 this morning. Right now, 5105. Maybe a 51. If I went 10 wide, this isn't too bad. If I go 15 wide, so a $65 debit. I'm going to look at this for like a pretty cheap debit. Let me go 30-cent debit. See if this will fill. This may or may not fill. Let's find out. 30 debit, not filling. 35 debit. It's above the mid price. All right, just got filled at 30 cents. So I'm putting in a butterfly spread for SPX. So I bought the 5110, and then I bought the 5090, and I sold 2 at the 5100. So this is a pretty inexpensive trade. It cost me 30 cents. Potentially for the day, offers up. And again, the pin is not really what I'm planning on. I could potentially make a 30 to 1 trade. Like it's ridiculous how much money this thing offers. So 965 divided by 30. It offers up a 32 to 1 profit. It's ridiculous how large that could be. Now, in order for that profit to be achieved, I need to see price basically pin at 5100 by the end of the day. Now, the reason I'm taking this trade is if price is going to slide lower, if price is going to slide lower towards 5100. So if we go down to 5100, my 30-cent debit is probably going to show at least 60 cents, maybe even closer to $1. I'm happy to take profit right there and just move on and not have to sit and wait all day and see like, oh, I hope it can. Look, it'd be awesome if it sits here and pins by 4 p.m. today at 5100, but the odds of that are pretty slim. So I'm just going to look to see, if it makes its way down at all towards 5105, 5100, and we'll see what it does. So I'm just going to set some chart alarms now, zoom in on this chart here. And I could also just waste 35 cents, which is not a big deal. So I'll go 5105, 5105, check, butterfly. So chart alarm set right there. I put on a trade this morning on SPX. I did take a small loss. I ate 50-cent and 65-cent loss this morning. Usually this is a quick win when I trade SPX in the morning, and today's price action is suggesting that, because I saw that kind of gamma level of 5100, because I'm looking at market exposure down here at 51. Certainly the bears are a bit more in control. You can see a couple of big levels on SPX, 5100, big level down here. Market maker levels will be forced to hedge. I mean, they could be taking taking the plays down to 5100 before they offer up a bounce. So I could see price just working its way down there, and that's going to be something I'm watching. So in between, obviously, there's some support resistance in between. It's kind of no man's land. But if we're going to see some levels get tested, some support, some reflexivity in the market, we're probably going to hit 5105, 5100, and just have another kind of nasty day. I looked at the heat map this morning. I think 70% of stocks were down in the U.S. So right now we've got 74% of stocks down. You can just see red everywhere on the U.S. map. Netflix is a little shiny green for the day. Netflix was up to about $1,000. Now it's fading slightly. I do have an earnings plan Netflix that I took last week. We had earnings on Thursday at the close. There's no way to trade it until this morning. So price is really right where it left off. I've given myself a couple weeks on this trade. We do have earnings this week. So thought this was interesting. These are forward valuations for the S&P. Key levels. Okay. Key levels and key valuations. Right now, like 2022, the valuation for the S&P went down to a 15 times earnings before we bottomed in September. Okay. Large cap still trading at 19 times, mid cap, small cap trading at 13 to 13.9. I just wonder if this is going to be a continued forced rotation, or at least pressure on the large cap side to push this down into, a multiple that makes it a little bit more attractive, to kind of be worth taking on that risk. But what price is that? Probably not the lows at 4,800. I think that's my biggest concern, is that I think right now the market can still hang in there. The market is like hanging in there. Maybe if you're picturing, you're hanging on the edge of a cliff, okay? And you've got 5 fingers. Well, every day this thing goes lower, you got one finger that's getting stepped on. Goes lower again, another finger that gets stepped on. Eventually, if we do like a severe break here, that's not a bear trap. If we do some severe closing below 4,800, that's all fingers getting lifted, and that's falling to, maybe the branch that's 30 feet below you, and then you hang on to that branch. So the market's not going to be bear market in a straight line. It's going to be, kind of wild and crazy. But I think right now this is going to be the Trump put level. Potentially a bear trap could also fire up the Fed put level. I thought the Fed put would be way lower. I truly did. I thought the Fed come to the rescue would be like 40, 35, 40, 45%, because if they waste quantitative easing here and the market pushes lower, it's for the first time in a long time, it's almost like a worthless Fed put, So anyway, I'm not going to sit here and say like we're going to go lower, because this was such a disruptive move from this low to high that realistically this market could go like it did here, failed at the high. It could come all the way back down to the low again and fail. And we are getting no real traction or direction outside of this, just a big noisy area, right? And I could see the market, testing bear trap and then finding some traction to the upside. I just think the most important thing is we keep saying this. It's like, you just got to survive. I like literally, it's like, I'm okay taking small losses. I'm okay managing risk. And that's probably the smartest thing. I know that I'm going to have to, eat some red in the interim. If things aren't working out, I don't need to sit here and hold crappy trades. Everything I'm trading is defined risk. I do have a trade that's going to be interesting this week with Tesla. Tesla trading at 225. I did get assigned Tesla over the weekend. It was another ratio, or it was a 1-1-1 trade. which was a 265, 260 by 255. I got assigned at 255, and here it is. So assigned working on repair. I talked about this last week. I wasn't sure exactly how I'm going to approach the earnings play. So what I have is I just bought a 150 put for 3 contracts. So I have 100 shares of Tesla, but I'm showing, basically what controls 300 shares. If we have a bad earnings report, I want to be able to protect some additional profit to the downside. So 150 put I know is way out here. Okay. However, if we have an aggressive push on Tesla to the downside and we hit, 180 or so or 175, let me actually calculate out what this expected move would be. So let's go option slam. Let's go to Tesla. Let's see what the average move is. Okay, average move on Tesla is around 14.4%. I would say safely around 11, 11 to 14%. We have slightly higher volatility. Let's see how many times. So average is I'll say 14%. And we're trading at 224. So 14% times 224. We're looking at about a $31 move on Tesla. So if we go according to the earnings here, then Tesla potentially has the ability to get down to like 190, 190 to 185. I'd say on the high end. If we have just a monster move, then you can double that, and that would be similar to what you saw with United Health Group, which was what should have been about a 7% move. All of a sudden, blew out to like a 20 plus percent move. By the way, that trade I took on UNH did get filled last week. We talked about that on I think Wednesday, Thursday. I put in a debit here. It's a debit spread of $4.60. It got filled. So there's $5.40 of potential upside. This is a May 16th expiration. So all I'm really looking for is if price just heads back up, I need this to be greater than about 455, 460 for profit. So let me set a chart alarm back up here. I'll go 460, check debit spread. So chart alarm set there. So see if there's a gap fill in any way, shape, or form with this pretty strong support. This is 2-year support on UNH. But anyway, let me get back to Tesla, crunch some numbers. So the expected move is around 14%. How often does it get there? Let's find out. Within about 8 days, 8 to 13 days, let's check on Tesla. So how many times does it get to 14%? Day 13. If I did an expiration for not this Friday, but next Friday, Tesla. So if I go out to not this Friday, but next Friday, well, I guess if I did an expiration for this week, that would be anything less than 8 days. So I can do that here. All right, so I'll take 8 days. So how often does it get to 14% or more in 8 days? Doesn't get there, does get there, doesn't get there, does get there, doesn't get there, gets there day 8. Doesn't get there, doesn't get there, does get there. This is, and again, this is pretty common with a lot of earnings, is it's sometimes it does, sometimes it doesn't. It's literally 50-50 right now. So it's a bit of a coin flip. Doesn't get there. 14% doesn't get there. Doesn't get there. Doesn't get there. So honestly, most of the time it doesn't get to the expected move. So if I were to pick, I mean, I've got 4 times that it gets there. So 4 times it gets to the expected move of 14%. And this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 times that it doesn't. So in the last 15 earnings, 11 times it has not hit the expected move of 14%. Now that might change here after 13 days, but if I went to this Friday's expiration, there's still a chance, like there's an outlier that yes, you could have a trade not work out. But a trade that actually, could be interesting for this week would be selling premium on Tesla, going to Friday and seeing, okay, it's trading at 225. So if I were to sell the 225, I mean, the plus minus is about 24 points. We did the numbers here. I mean, I'm expecting 14% on a 225 stock. I mean, that's a $31 move. So this is, it's just not quite offer. Like for me to take this trade, this would have to be offering me about $30 to $32 credit right now. And it's not. It's offering me what this plus minus is here. Now the IB is 63.2. If I wanted to take on any risk here, 225, let's say to 255. Let me flip this. 225 to 255. So I can buy that wing. And then the 225 to 195, I could buy that wing. So basically, I've got a plus minus 20-point move in order for me to make money on the trade. Now, the trade is aftermarket Tuesday, which means you have Wednesday, Thursday, Friday to manage this trade. What this looks like is if I took this trade, you would have a potential profit trap and you have potential risk. And so if price goes plus 20 points up or it goes minus 20 points down, you're taking on some risk. Now, that risk is about $1,000 to potentially make $2,000. So if price stays inside this trap, which means it doesn't go plus 20 or go minus 20, then that $19 you collect on the trade can trade easily for $18, $17, $16, $15, $14 debit. You can turn that into a nice win. Okay. But the outlier risk is maybe it's one of those situations where Tesla goes way beyond, and I don't know. So anyway, my point is I don't mind having shares of Tesla. Fundamentally, the fair market value is probably around 170, 175. This has been one of the worst Mag 7 stocks in a while. If it's even in Mag 7 anymore, maybe it is, maybe it isn't. I think it is. It's certainly top 10. Market cap is 726 billion. I mean, I don't even know. This is a $1 trillion company that is lost, $200 to $300 billion in market cap. So anyway, long story short, I'm doing the math on this. Here's my spreadsheet, and this is the trade. So if I, zoom in here. So that was the trade assigned, 247.95 is my break even. I added a May 9th 150 long put. All I'm really doing there is I'm adding multiple contracts. It cost me $1.60 debit. If that $1.60 debit trades for, $5, $6, $7, $8, $10 credit, I'll take the profit. I'll lower my cost basis probably down to like the 230s, and then I'll just start aggressively selling calls. It might take me a few weeks to get out of it, but it wasn't more than like 2 weeks ago. I took 2 to 3 weeks to flip Tesla for like $7 grand. I'm going to try to do the same thing. So the story will, continue. It's not done. And I guess best case scenario, and this is kind of, wishful thinking, but best case scenario is that I've got the 150 put, which is way down here. Okay. Best case scenario is Tesla just murders it on earnings, and it rips up here to like 260, 265, 270. I will immediately take profit. I will dump my puts, and I'll take probably somewhere between, $15 to $20 a share and just get out of the trade. And I've got this on 4 accounts. So it could, I mean, if Tesla somehow leads the market to believe that there's good things happening, and it doesn't just look like it's along with everything else, which is just negative news, then I didn't want to cap the upside. So I did debate on this last week whether or not I wanted to keep a collar trade running. But I don't want to have the collar trade running because if I sell a call and I buy a put, I want to make sure I have enough time on the put to take the profit, and my credit would have been like $1 or $2. So I own the break even at 247. I lower by $1. I still have downside protection. It's just like a kind of a longer window than I want. So I'm going to take my chances on a put. If the put pays me, great, and then I'll just start adding covered calls and I'll kind of wheel my way through it. But I'll go week by week by week because the premiums on Tesla are pretty solid. So we'll see what earnings gives us, and that's it. Like pretty straightforward. So what are your thoughts on? Yeah, I know it's falling. I think this is just something to be careful about. Look, gold and dollar are probably the closest correlation right now as far as inverse. So if you go to gold, right? So gold is up almost 3% today. So GLD is up almost 3%, right? Impressive. I measured this out. The same stretch we had with capitulation from 2009 to 2011, when we got up into the top before gold crashed, gold was heading straight up. The dollar was heading down. So I could see something similar happening here. Look, this has been now like weeks and weeks and weeks of saying the same thing. Gold has been a great trade. There's no denying that gold has been a great trade. Okay. But I still firmly believe that gold is going to find this 144 to 200 moving average, and gold is likely going to be, if we get up to this crazy capitulation move and then gold crashes, or at any time gold just pivots and turns hard. I think there is a correlation between what gold is doing and the dollar. So if gold continues to push higher, that's probably going to keep pressure on the dollar to fall. Right now, the dollar index, technically we're oversold. Let me go to a bigger workspace here, get rid of some of these. So keep that one off to the side. Watching some levels there. Heat map is just blood in the streets. Keep that for fundamentals. Let me put in my macro workspace here. So gold. Gold on the weekly. This is a weekly chart, by the way. Gold on the weekly, way overbought. And this is a RSI 20 period or 21 period and 14 period. Again, it doesn't mean anything other than, yep, it's overbought. But this doesn't mean that the top has to be in immediately. In fact, just looking at this workspace with all the technicals here, MACD is showing additional convergence, meaning that there's still momentum here to push. Histogram is still making higher highs. Our signal line was back here after a dip, which would have been, late last year. We had this little crossover, still had a signal line move that would have put you around a buy around 2,700. It's not a bad trade, obviously. So anyway, money flow still comes in. We have overbought conditions, but this is probably like one of the better safe havens running. Dollar index, not awesome at all, right? I'm cautioning traders to sell the dollar when you're already way, way, way behind the move, right? I mean, when we started talking about selling the dollar, it was on this bear flag. Okay. And when I say that, because looking at all this support and coming up and sweeping all these highs, I thought if the dollar's going to hold here around 106, that's the chance for the bulls to step in. And they never did. And so as soon as the bears flushed them lower, and this is all of a sudden, okay, we're probably going to come back and revisit the low when this broke out in September. You had a bear flag right there. That was your best trade on anything dollar. You want to go long euro dollar, long pound dollar, long Aussie dollar, long New Zealand dollar, short dollar CAD, short dollar Swiss. That was your trade. Now this is just a run. So it's running. It's oversold. Could it go lower? Sure. To where? Well, I've got about 97 on the DXY. That'd be a symmetry move. So high to low, lower high to lower low, there's symmetry. Okay. If the dollar bottoms out here, sure, I expect to pull back towards 100 to 101. Could the dollar be longer term bearish? Yep, absolutely. But I don't want to call the bottom. I think it's too early to get scaling in yet. I think it's too early. But if the dollar pivots hard around this like 9,700, maybe capitulates through it a little bit towards 96.50, 96, whatever. I wouldn't be shocked to see the dollar make a little bit of a move. If the dollar starts to catch a bid and head back up, I do expect gold to turn and drop. Okay. Just as not a great time to long gold right now. I agree. I mean, and this has been the last couple weeks on gold. Okay. I've said the same thing for the last couple weeks. I can't justify buying gold. I'm already in gold. Thankfully, I'm already in gold. Thankfully, this has been a trade that's been running for the last couple years. Okay. But I can't justify going long gold right here. These are terrible prices to go long gold. These are terrible technicals to go along gold. What you are getting in right now, and there is a quote, like I think this is a George Soros quote, but show me a bubble, and I'll show you a trade that I want to take, something along those lines. Like, I mean, gold right now could be getting into a bubble where this just stretches, and it doesn't have to stop here. This is just a correlation that I pulled back from 2009 to 2011. But if we go just where all the technicals seem to be breaking, and this gets everyone's attention. It's already getting our attention because we watch this every day, but it's not necessarily mainstream media yet. And until you see like all the retail crowd that's like, look, the stock market's red, the S&P's red, everything's down for the year, I'm just going to put my money in gold. By the time that happens, you might get a little bit of extra, run to the upside, but that crowd that gets in that late is going to be left holding the bag with and this is not an exaggeration, probably a 20% correction in gold. Okay. Because if we turn right now and find a 200 moving average, that's a 20% correction. If we run higher in gold, another, 10 to 11%, we have another correction. That's almost 28%. So I'm just gonna I'm gonna make a little proclamation here for 2025. Gold is gonna be another weird asset that has like this great run, and we're gonna have like some type of break, like some correlation between gold, the dollar, maybe the U.S. bond market, something is gonna break. And gold has been a great trade, not just as a safe haven, not just as an inflation hedge, but also as an asset that the whole world wants. And interestingly enough, Bitcoin's looking encouraging as well, which is, I mean, again, I was completely wrong thinking that, in order for Bitcoin to go up, we're going to have to see the S&P and the Nasdaq go higher. It is for now showing that there is some resiliency here. Now is gold at all-time highs? Yep, and it's still running. Is Bitcoin anywhere near? Not even close. So, to really prove that, hey, Bitcoin is a legitimate alternative now, and it's being treated as such, and it's being priced as such, then Bitcoin probably has to be traded back over 105, $106,000. If Bitcoin goes sideways like this, if we're going sideways on Bitcoin, just expect more noise. Okay. Um, the S&P, because we have such a large swing between that low of April 7th and the high in April 9th, that 13.3% swing in the S&P, all this movement can be noise, right? And we are just left with like head spinning volatility, intraday swings, gaps of 1 to 2%, 100 to 200 point swings. It's like these are insane. These are really insane. This is not like a common environment for day trading. But man, the markets are just moving. So anyway, summary is this: gold is treating every trader great right now. If you're long gold, you'll love it. It's probably one of the few highlights of the year, and maybe enough to help you fight this battle that the market's been giving us. I'm still not taking profit on gold yet. Okay, if gold wants to get more ridiculous, I'm gonna lean into the ridiculousness. Okay, because if it doesn't get ridiculous and it pulls back, then sure, I'll wait for a correction. If I get one, I'll start scaling back in. I think we can still go higher on gold. But if we're going to talk about gold bubble, then gold is just going to start ripping higher. It's going to look like every future chart that's broken over the last couple of years. Coffee did this, orange juice did this, lumber did this back in COVID, cocoa did this recently. I mean, hell, copper did it this year. Copper was up to all-time highs and came all the way back down, like a 20 to 30% correction in copper. Now it's back up off those lows, but that's the type of volatility that we've got happening. It's not normal, but this is what's going on. So copper's still hanging in there. I've got an expiration in 3 days on my copper trades. This should be mostly in profit. So let me take a look. Copper here is up now, about $1,200. So hedges looking better. So I'm just obviously prices down a little bit. So my hedges are working okay. This October hedge, these are up. These aren't up a ton. 25%. Okay, other hedges doing better. I've got this micro S&P is up 110%. My ES trades up 123. This is up like 300+% before, but both of these had the potential to be like up 500%. This one could be up like 4,000%. Keeping those hedges in case I need them. So if we do come back down and revisit the 4,800 lows, I want to make sure I have that protection. So all right, thoughts on gold. I know it's a hot topic every single day in these sessions. Everyone wants to know what gold is doing. Look, it's been a great trade. I can't in good conscience justify buying gold at these levels unless you're like short-term trading, which could be like intraday scalping, but it's still not my favorite. Um, I want to enjoy the bubble if we're getting one. If we're going to get a bubble, I'm going to be in it. I've got GLD, CEF, PHYS, XAG, SLV, like a lot of stuff, right? I don't have any gold futures or silver futures running right now because I was waiting for dips. I'm not getting them, so I'm just running with GLD, SLV, and then some other correlated ETFs. But we get into this area, I'm moving stop losses on all of those assets. Okay. So, what would be and I have no idea, right? But if we bubble up here towards like 3,800, I could see between 3,800 and 4,000 being like the bubble's going to pop. Currency strength on the day. Swiss is probably on the top of the food chain. Interesting. New Zealand dollar. New Zealand dollar on top. Swiss is fading a little bit. Dollar's weak. CAD's weak. Okay, fine. Just hang in there. But that's gold. So if we bubble up, I think the bubble burst. I'll just, like I said, I'll say this. I think gold's going to have a 20% correction this year. And how it happens, well, it could be starting now. It could be starting with a bubble that pops, and then all of a sudden, everyone that jumps in late is going to be left holding the bag. We need to be smarter than that. If this is going to go another 5 to 10% to the upside, do not let those profits slip away. You know, it's not worth being greedy when this thing is already overextended, already overbought on multiple time frames. It's to me just a matter of if and when and what is the pivot. It could be the dollar, it could be the bond market, it could be a Fed put, it could be a Trump put, Fed put, it could be a bunch of things. All these are kind of in limbo for the year, but those will be directly impacting a lot of assets. If there's a Fed put, the market might rip. If there's another Trump put or the U.S. Government with fiscal policy, who knows? Um, but it's going to be something I want to be able to act upon. Okay, all right. So SP's down. I'm going to keep an eye on that butterfly for the morning. So right here, just watching that chart alarm, we're down to 51.63. We're starting to make some fresh lows. My blue lines represented my trade this morning. I closed out of that trade for a small loss. Looking at the butterfly, see if I can pull in, like a little 100% winner. Maybe I can, maybe more, but we'll see. So keep an eye on that one for the day. We did gold. Let's do silver. Dollar index. Dollar index is oversold. I've got symmetry. If you want to write this down, symmetry around 90. Well, we got a 618 extension. That's never mind that one. That's not what I want. Let's go to. Yeah, let's just go symmetry here. Let's go to like 96.30. So I'll say 96.50 to 9600 would be a good technical bottom for the DXY. If we're going high to low, lower high to lower low, I could see the dollar pivoting off that symmetry, and then it's pretty clear. Like if we do bounce here, where I'm projecting that symmetry, if we do bounce here, then it would make sense that we bounce back into what is all this multi-year support to become resistance. And if the dollar is truly going to head lower, then there's your fifth wave, right? So wave one, all this is multi-year. Wave two, okay, wave three is what's now, very aggressive. And this is an impulse wave. And I'm not an Elliott wave person. It's just pretty easy to count, three waves. Three waves and five waves are not that easy to, or not that difficult to count and see. So if this is wave one, all this is wave two, this is wave three. Four is usually a brief pause or pullback. And then five would be the slower behaving continuation to finish this move. But that's more long term. I mean, we could be talking dollar index down to 90, but it might be, a year or two away. Okay. So anyway, I think the dollar could go a little bit lower before it pivots. So that makes me think if you're looking at dollar crosses, look, euro dollars had a fantastic run. Pound dollars had a fantastic run. Aussie dollars had a fantastic run. New Zealand dollars had a fantastic run. Dollar CADs had a fantastic run. Dollar Swiss had a fantastic run. Dollar Yens had a fantastic run. All of them. If you're in those trades and you're favoring a weaker dollar position, so you're long euro dollar, you're long pound dollar, right? Trail. Move your stop losses, trail. If it wants to keep going, trail it. All right. Because my concern is that this turns and this pivots, don't get back those profits. So even one candle, trail it. But I would not take fresh positions and be short the dollar right here. I would not also bottom pick and be long the dollar right here. I think that's also a really risky trade, right? Especially in Forex when we have the risk of flash crashes. Typically, a flash crash is in the direction of the trend. So if this is going to trend lower and it flash crashes, which, by the way, I've never actually seen a flash crash on the dollar. It is one of the most liquid currencies in the world. I've never seen the dollar be the catalyst for a flash crash move. It's happened in the Japanese yen. It's happened in the Aussie. It's happened in New Zealand. It's happened in the Swiss. It's happened in the pound. It's happened in the euro. But I've never seen the dollar index be a reason for a flash crash. So maybe this is the year. Because certainly the dollar has been one of the bigger storylines, and dollar super weak. Okay, oil. I think at best oil is kind of range bound right now. I don't think oil. I listened to this interesting podcast this weekend. Somebody is a macro guy thinking that oil lows are in. There could be some indecision in here. which I agree. I mean, I think indecision is probably what we're going to deal with. I don't know if this is, the low and all of a sudden oil is going to rip back up to like 80. I don't think that's the case. Um, but I also don't think that oil is just going to be doomed. I think there's too much riding on fair prices for everybody to operate and still have some margin or still maintain some type of break even operation, as opposed to the margin pressure that happens when oil is lower. It it causes all sorts of problems for like the global economy. Like everyone that is commodity based or energy dependent, those countries struggle big time if oil prices are too much lower. Even the U.S. I mean, even with the U.S. The Keystone Pipeline or anything through Canada, Alaska, whatever Trump has in mind for deregulation, I still don't think that those companies want to see prices above like 55 or 60 bucks. I think below that, it just cuts into the margins. They can't, turn on, turn off rigs willy nilly. Like it has to be, it's like it's a year to 5 year commitment. It's billions of dollars in commitments. And it just has to be super frustrating. Everything about these markets right now, everything about business in general and making decisions for the future has to be incredibly frustrating right now. It really does. So I don't envy any business with all this uncertainty. But where do I think oil is going? Well, here's what I would consider. If oil comes back down to the lows, I would consider a defined risk oil futures trade. In case that bottom is in, I might take a trade there. So I'm going to keep an eye on this one. I don't really have a trade in oil right now, but if we come back down to the same lows around 56, I will probably look at a bull put spread on CL for oil futures, or I might put in a 111, which is a buy put, sell put, and then probably define that for a four leg trade. I try to make $200 to $300 income for maybe a $500 risk with a profit trap, or if I go a debit spread, I'm looking for asymmetry where I can risk maybe $100 to make 150 bucks, something like that. But to me, it's like it's in the middle. I could try to sell here, say it's in the middle, and maybe that's fine. But I'm going to take in maybe 10 cents on the dollar, 20 cents on the dollar. I don't really love that risk compared to reward. So I think I'm just going to look for if the bottom holds. See if the bottom holds. Let me put this chart alarm up by a dollar. If the bottom holds, I'll take a stab at it with a higher reward to risk. Natural gas. Before we broke above the 200 moving average, natural gas was called the widowmaker, and I'm now experiencing why. Because what started off to be a very encouraging position, which is still out to 2027, but it's reset, more than halfway. So this low to this high is now pulled back even deeper. So we're back below the 200 moving average. This might just reset all the way back down to the lows again, which kind of makes this position crappy for me. Gold we just talked about. Okay, silver responding nicely. I'm hoping that silver plays catch up in a big way. You look at silver versus gold. This is nuts. I mean, we broke out of a multi-year range. Gold is outperforming silver in a big way. I think it's 2, if not 3 standard deviations above the norm. So gold is being treated differently right now. Gold is being treated like the king of the safe havens, the king of the uncertainty, whatever. It's the anti-dollar trade right now. But silver is poor man's gold and might actually offer up a slightly better reward to risk, or even something I can measure, which is if you go to a silver chart, you can still see that it was as high as $47, $48, and we're trading right now at 32. So gold at all-time highs is like, how much higher does gold go? Nobody knows. I can't call a number. But on silver, it's like, well, we've been 47. We've been to 47. I think we could get there again, and that's a heck of an upside to measure and look at. Okay, so we'll see. But I like both, and literally, for like gold and silver are both performing really well in the portfolio, and I'm going to keep riding those out. Okay, Bitcoin, like I said, looking a bit more impressive considering the state of the market and the fact that there's a lot of risk-off trading, but Bitcoin is still holding resiliency. I saw over the weekend that I think MicroStrategy bought another freaking 6,000, 7,000 Bitcoin or something. Not that that matters, but I mean the fact that it's up today while the markets are down, kind of interesting. Is it again? I'm not going to speculate on like, oh, it's showing that it's finally depegged from the S&P. It's not necessarily true. I mean, I think that there are flows coming in, and honestly, because of BlackRock and those approved ETFs, I think this is showing a level of resiliency because most of the money that's coming into Bitcoin is not super, super speculative. I think this is now from this area here, this has become what is more of an allocation asset to have, the conversation. If you're a financial advisor, having the conversation of having 1 to 3% exposure in Bitcoin. Well, okay, well, if you're going to put somebody in a 60-40 portfolio and you're watching 60% perform like garbage, 40% perform like garbage because stocks are down, bonds are down, and you're talking about a 1 to 3% allocation to Bitcoin that's not going anywhere, it's not going up or down, like that is proving to be a pretty good investment. Well, if you've got another 1 to 3% in gold, that might be hanging in there. So point is, for US equity exposure, 60-40 sucks right now and probably will continue to suck for a while, maybe forever. But this Bitcoin, when this all started to happen, this became a much more of a stable outlook. And I think with BlackRock in the ring and, kind of being pro Bitcoin, pro crypto, obviously they benefit from it. ETF is IBIT, that's theirs. But I think that's why you're not seeing a lot of dumping. It's like a 1 to 3% exposure that's actually resilient right now is people are willing to hang on to it, not dump Bitcoin because they also, having made this run, maybe taking some profits there, reallocating because that 1 to 3% exposure is probably showing, 3 to 6% profit. Cool. Well, then reallocate it down to 1 to 3%, and you still hang on to it the same way you did before as it was accumulating. So this could be an accumulation phase. If we get another run, we'll see this rotation. We'll see a lot of this behavior. But I think that's why Bitcoin is hanging in there, like not really reflecting the risk off rotations we're seeing in the equities market right now. Make sense? All right, Ethereum, I wouldn't touch that one. Interesting enough, MicroStrategy also staying resilient. I might actually flip this one. This is coming into May. So I do have a 310 covered call. This is going to make me, if it stays above 310, hopefully around 16 grand. So MicroStrategy could work out to be a really nice trade. It has taken a couple months, a little bit longer than I cared for, but we did hold really nicely at 240. My collar trade at 310 by 240. I'm still watching that closely. I also, if it's way above, if we're trading, MicroStrategy's back up to like 350, 355, I might look at another 1 week roll and grab another $2, $3, $4 of income if I can, and try to beef up that bottom line. So this is another kind of highlight where, it's having the cash available, it's repairing the stock and the position, using options aggressively, and ultimately, adding some profit to the bottom line. So hopefully I can do without Tesla. If Tesla, like last week, last week or the week before, flipped it for like 7K. I'm gonna try to do the same thing again for another 7 to 10K. MicroStrategy, 15, 16 grand. Like there's some highlights with some of these positions. Coinbase, I don't think I have any other Coinbase positions. I was able to successfully get out of these ratio spreads with winners. I don't think I have any Coinbase left. I don't. Good. So I'm good with Coinbase, just not being exposed to it right now. But MicroStrategy, I've got it. Bitcoin, IBIT, I have it. Copper's fine. Japanese yen making higher highs on 6J. FXY, this is the Japanese yen ETF. This is also, it's not a big profit, but it's up. This is another kind of partial hedge for me this year. FXY is up around 3 grand, $3,100. So should I start taking some profit in this one? Maybe. Maybe. I guess my question is, this is the Japanese yen is kind of the inverse of FXY. But if this is a head and shoulders trade, I kept talking about this potential support, right? If this is, look, if this is a head and shoulders, okay, and this is a wild and crazy move, but if this is a head and shoulders, let me box this in. We have a swing from high to low, and I'm going to be conservative here because I'm going to say this is my first low. If I went all the way down here, that's a crown pattern. So there's 2 ways I have to measure this. I'm going to take this swing, okay, and we break that neckline. We go horizontal ray right there. So I'm going to take the swing. This is going to be my head and shoulders measured move, and my symmetry is going to be just a little bit lower than that. We actually are pretty close to hitting symmetry here. So if we go a little bit lower on dollar yen towards like 139, I could see that symmetry bouncing, okay? If this is a head and shoulders trade, and this has been months in the making, this has been a wild trade since 2022. But if this is going to be a self-fulfilling head and shoulders, then what's nuts to me is we're talking dollar yen up to 162 that now corrects all the way down to 121. That's back below this correction here. That's coming all the way back down to when this whole thing broke out back in 2022, right? So this whole move right here could be this liquidity run that is going to come back and rebalance this dollar yen all the way back down there. Does that mean I want to short dollar yen? No. What it means is I will stay long FXY. Okay. If this bounces hard, I don't think anybody's going to be surprised that it bounces back up. We just have this huge range between the dollar yen, maybe a huge range in FXY. I don't know. But if it breaks, don't be surprised if the Japanese yen offers a better safe haven than the dollar. And do we get into 120? Sure. Well, FXY at that point could be a much bigger trade. I'd probably double my profits. So if this is a head and shoulders, and I'll do the same thing here. If this is a head and shoulders, I'll box this in. So low to high swing. And if we break that neckline, FXY heads to 75, 74 to $75. So to me, it's worth hanging on to. Again, where's the inefficiency? All the way back here in 2022. So this is a head and shoulders pattern, and we break the neckline. Path of least resistance would be bullish until we hit that measure move. And it could fill all the way back up here towards $80. But, again, not trying to be super greedy. If I see the technical measurement, I'll end up taking my profits there. Okay, something to watch for. German DAX. It is fine. I'm looking for a cup and handle because it was such a sharp decline. So low to high, maybe a little bit of pausing here. Risk appetite returning would be good for the DAX, good for the FTSE, good for everything. Right now, there's just not risk on. Everything is gold. Like it's gold. Bitcoin, you can throw it in. There's like, yeah, it's behaving a little bit different, which is fine. FTSE, same thing. Below the 200 trend line to the 200 moving average, I don't love it. FEZ, still watching for a cup and handle. Argentina, probably some chop. I'll see if I can get another pullback towards the 200. Copper that's China actually. I was looking for HG. China, looking for a cup and handle. It's pretty strong support. I could see risk appetite if it returns to the market. China makes new highs. I could see a lot of non-US related indexes this year, DAX, FTSE, HSI. I can see a lot of those making some fresh highs. I'd like to see Brazil, Latin America do the same thing like non-US. We'll see. But, to me right now, it's like China's not breaking down below 18,800. So I think it's still structurally pretty bullish. It's definitely a risky trade, but right now technicals are holding. EWZ is Brazil. If we break above the 200 moving average with my chart alarm right there, I'm watching. ILF Latin America, MAG 7, back down to some fresh lows or getting back down towards those lows. I may look at a trade on MAGs where if we revisit the lows again, I might be willing to take a trade here. I can't imagine that MAG 7 earnings are going to be so bad that this is going to justify like just fresh lows. I could be wrong. Maybe this is one of the biggest storylines of 2025, which is, MAG 7 is down 33%. It's been the biggest contributor to the markets dropping the way that they've been dropping. You're shedding a lot of market cap right now. But I look at the technicals on the weekly time frame. My 14-period RSI is hitting oversold conditions. If we hit some fresh lows in price, this is one thing I'm going to watch. If we hit fresh lows in price, I'm going to look for some type of divergence on MACD and some type of divergence on relative strength. I'm going to look for some type of money flow indicator to show a higher low. That might be a very cost-effective position to get long MAG 7 without having to get long individual stocks. So that could be a trade I'm interested in. I'm going to set a chart alarm down here at 39 at the lows. I'm going to look for some divergence to see if I can scoop up some inexpensive MAG 7 exposure. Apple, out of this one with the ratio spread for profit, that's good. Amazon down to 167. I'm going to check some puts on Amazon. I have some ratio spreads as well. I'll be watching out to the it's summertime, like June and December. AVGO not touching. Google 150 is a big line for me in Google, coming back to these correction levels in 2024. Yearly moving average. This is a 5-period yearly moving average at 135. If it gets overblown, I'm going to look for some diversions on Google as well. Meta might be a long-term trade for me back into the 450 to 400 zone. It's still I won't forget 2022 Meta. 2022 Meta, it was down 75%. So just for this thing to say, well, 48% seems like enough. I mean, is it though? I mean, here's previous highs. I'd like to say, yeah, it's a good spot to dollar cost average into. The nice thing is whatever that investment is, we get to all-time highs on Meta. It's almost 100% return. You don't see a lot of those trades line up, so it does get me pretty excited. But that's not necessarily the bottom. I like the trade. I like the idea. Fair market value. Let's see what Meta is fair market value wise. Meta. Snowflake is good. I mean, price to earnings is actually not super expensive compared to the other Mag 7s. Fair value 870, 887. And if we're trading at 450 or 400, I love that trade. We were as high as 742. So I think I'd be willing to kind of hold a position in Meta, see if we can get back to all-time highs, hit $1,000 or so. Great investment. But dollar cost averaging, you're willing to sacrifice. A lot of trades here on Microsoft. I think I'm done with this. I think I got out of Microsoft with all wins on. Yep, I literally just have fractional. Oh, that makes me feel better. I put in a bunch of aggressive ratio spreads, close for profit, close for profit, close for profit, and that's it. So I do have some dollar cost averaging, and that's fine. But I'm just gonna hang in there. So these are all done. Good. Netflix. I'm gonna set a chart alarm towards this like 10:45 handle. Okay, and then a chart alarm down here at 9:15. All right, just want to see if it gets to those expected moves. Nvidia trading below $100. Nvidia not looking good with any. I don't know. There's the optimism is just kind of popped. Basically, they're writing off like $5.5 billion. They're taking potentially another revenue haircut of $18 billion. They don't really make any chips. They design them and then they have everyone else make them for them. So I don't know if Nvidia is going to be like the modern day Cisco, where it's just like, yeah, it was the greatest stock ever, and now it's 90% off the all-time highs, or if there is still resilience in here and there's a fair market value at 115 to 120. I'm not trying to make a long-term case for Nvidia at all. I'm just trying to hold in there with, like, I sold a bunch of premium at the 65, 60, and 65, 60, and $55 puts. If those hold for May, June, I'll make money on those trades. That's about it. I'm going to set a chart alarm up here on the 130 handle for a collar trade. That's about it. See if we break any lows. That's 85. So just surround this with some chart alarms. Tesla 224 earnings tomorrow. Berkshire Hathaway fading off the highs. I wanted to short this one, but I mean, based on what we saw Wednesday, April 9th, if any positive news hits the markets, you can see that this market is just desperate for something good to happen. It's not getting it, so it's why it's like this slow, gappy, bleeding to the downside. But if the market gets another kind of Trump put or another tweet or another something, all it takes is U.S. and China figuring out the trade war. Boom, market fixed. It's like it's so dumb that that's how easy it could be. But until that headline actually hits, this market is just pricing in a bunch of angst and anxiety. Bonds. Okay, here's another concern, legitimate concern for the U.S. Bonds are down, right? Long-term bonds are down. Short-term bonds are up. So you got 1 to 3 year up. You got 7 to 10 year mixed. Long-term bonds down. So your yields, the 2-year yield is down. So we're trying to bring the short-term yield lower. Your 10-year yield is actually going higher. So let's take a look at your 10 and your 2-year. There's your 3-month, 2-year, 10-year. Here's the 10 and the 2. So your 10-year, 2-year is still disinverted by quite a bit and making higher highs. Your 10-year and 3-month is right back around the zero line. This is the borrow time concern that I had with a recession. Um, a lot of businesses right now are already saying we're already in a recession. Nobody's saying it yet because it's going to take quarters of GDP to go negative. But you're going to get the same thing as 2022 is like this weird rolling recession. So anyway, interesting how the short end of the curve is dropping, but the long end is rallying. So TLT is down. It wasn't that long ago, like literally the last couple of weeks, there was your kind of Trump put right there. Was a bit of the break in the bond market. So what happens if TLT makes fresh lows? Probably going to see some chirping out of Trump. You're probably going to see something happen with the bond market showing some resiliency. This combination of like what the bond market does compared to gold and the dollar, I would put those all in the same watch list. Watch and see how they behave, because I think that's where something's going to break this year. Is U.S. bond market compared to gold, compared to the dollar, the way those play out together is going to be something that it could really send reverberations throughout the entire market. Okay. All right. Let's get into some currencies and I'll let you go. So a lot of stocks, I mean, everything's red, 75% down for the day on the heat map. Oops. So we have 77% of stocks down in the day, a lot of red. It's one of those days. We felt it. We feel it. Is it down to the lows from April 7th? No, but it's not looking great. I think 5,100 would be an interesting spot today. I'd love to see a big fat butterfly pay me 32 to 1 today. If we can settle in at 5,100 by the end of the day, maybe I can turn a 30-cent debit into like a $3, $4, $5 credit, which wouldn't be all bad. But stocks are looking pretty rough right now. Let's go currencies. So Aussie CAD we'll start with, but currency strength. This was Thursday last week. Here is today. So we still have Swiss on top, Japanese yen, euro above the baseline. New Zealand, interesting, one of the stronger currencies. Bro. I think we have guests. All right. All right. Okay. And the dog's excited. Okay. So let's check currencies here. Aussie CAD. I'm still looking for that pocket to fill. I am long Aussie CAD. I still have pending orders all the way down here to 82 and 8100. I did get filled in this 86. I didn't go aggressive like 86, and then I went to an 84 and an 82. So I'm still waiting to see. I mean, it's probably not going to come back any lower. I would say if anything, this is a low, high, a little bit of a pause, and then we're probably coming back up. So I'm going to stay long Aussie CAD. Aussie Swiss, are we at some fresh lows right now? No. But watching, this is what I've said the last couple of weeks on these Swiss crosses. I'm watching for a bottoming formation. The chunk of shares the chunk of positions I have, this is my break even. Okay. I have all these buy stop orders that I want to add back into this trade. But what I'm going to do is look to see if this comes back down to a low. I'll probably start stacking in some lower levels. I'll start stacking in some buy stops up here. I'll surround this position. But technically, this is what I'm watching for right there. A move back into this pocket, whether that's a 1 wave or a 3 wave or a 5 wave, it doesn't really matter. But that's target 1 for me. And if we have let's say this is a fresh low 1, 2, 3, 4, 5, then I'm going to move this take profit and all these buy stops and this break even. I'll just adjust it. I can be flexible on my plan when I'm dollar cost averaging into some of these Forex positions. But it's not enough for me to get aggressive. I need to be, careful of my trade size. So I will watch. But I'm watching lows. I'm watching for a bottoming formation. But I don't want to be stuck trading too large because we could certainly have some type of flash crash move. Aussie yen, be careful. Yen pairs, be careful. Oversold conditions on Aussie, New Zealand. I'm okay just hanging out on this one. If we come back into range lows, there's a lot of levels here that I'd be looking to dollar cost average into. So some of those big levels in Aussie, New Zealand, I would just buy and buy and buy and just let this thing be a range. Basically it's a range from 1.00 to 1.14. It's a range trade for me. Okay, Aussie dollar, like I said, with dollar crosses, if you're already trading against the dollar, it's a profit protection time. It's a trailing stop loss situation. Like if you're long Aussie dollar, I bought in at 60.20 and closed it out here near the highs. Good enough. Okay. If I was still in the trade, I would have a stop loss right below these last couple of candles, and that's it. Like if it keeps going higher, move your stop loss again. But if it hits resistance and starts to pull back, don't be shocked. So take the majority of the profit. If it wants to go higher, give it a chance. If it doesn't, protect 80, 85, 90% of the move. Okay. CAD Swiss. This is another one that I'm going to actively watch for some bottoms. Okay, we're right back down to these same lows. This could also be heading lower, but if it's heading lower with divergence, I'm looking for a pricing pattern. I'll move these buy stops down to some type of buy stop level above current price. I'm considering maybe a buy trade down here, a market trade, or I could put a limit order at 57.50, 5500, maybe. But again, mindful of my break even, not getting overly aggressive, but just going to continue to kind of work my way through it. Yen crosses. I don't love the yens at all. Euro Aussie. This because of the way this one behaved. I mean, we could have high, low, lower high, lower low. This could be Euro Aussie, Euro CAD, Euro New Zealand. Keep an eye on those technicals. Line up the higher time frame, shorter time frames. Euro CAD. I talked about watching for confirmation on a smaller time frame. I don't know if you're getting it. If you're watching, wait for confirmation. Don't force a trade here though, right? I just don't know. I mean, there's a lot of overbought conditions. There's some divergence. I could see this below this candle or this candle heading back down to the same range lows. But again, not interested in calling tops or bottoms here. Euro Swiss still kind of hanging in this multi low, this 9200 low. We could have some type of move back into like 9,000. Maybe that'd be really ugly if it happened, or we just hold the lows. Right, we hold the lows right in here. Maybe it holds, maybe some divergence, and then we get a bullish pattern. I'm looking for a 5-wave move out of this. Again, buy stops. I'll move these lower, either buy limits or market orders if we're back at fresh lows, watching for a bottoming formation. Euro pounds, no trade out of this one. Once we hit the 200 moving average, I'm just letting a robot trade this one. Euro yen, no trade. Euro New Zealand, I don't know. If it just slides all the way down, that's fine. I'm not chasing this thing. I was looking for a trade to offer this up. If we go high, low, lower, low, just a little swing trade. This could be a really nice swing trade, actually. Look at like the 50618 retracement, stop loss above, go after a 127. That could be a good swing trade. Euro dollar, same thing. It's making higher highs. Move your stop losses. If you're long euro dollar, which I was long here, okay, close it out at the highs, at resistance. That was good enough. Now that it's higher, if I was still in the trade, I'd be long. I'd be moving stop losses, moving stop losses, moving stop losses, and just letting it trail. If it wants to go higher, let it go higher. Trail it. But I'm not long anything right now, euro dollar. I think this trade is already, I mean, my gosh, from 1.02, I mean, we've already had a 12 to 1,300 point move on euro dollar. That's a big move. Euro dollar's not normally that crazy. So the nice thing is structurally, I mean, even pulling back to this level still offers some buy opportunities. If for some reason it just stays, bullish, trail it. But I don't think we're going to like 120 without a pullback. So it's too late to buy. It's too early and too risky to sell. So if you're long, which you should be, if you're lining up any confirmation, you're long already, but just trail. That's it. It's not that hard. Pound Aussie, I'd stay out of that one. Pound CAD, same thing. Just be careful. Those are super high volatility. Pound Swiss, I don't think the pound Swiss is a terrible trade. It's just high margin. Just be careful on this one. But I think that this trade comes back to fill his pocket. I think we have about a 400 pip trade that's pretty high probability, but you got to be prepared to buy it here and be prepared to take this down to a flash crash low at 102, maybe even down to parity, which would not be fun because not a lot of traders are going to jump into something that's like, yep, Chris talked about an 800 pip risk. Most people are going to puke if they see that. So you got to trade it small, but I think the upside at 113 is pretty good. Okay, pound yen, no trade. Pound New Zealand's, it's already fading. Maybe a dip at the 200, but no trade that I like. Pound dollar, same thing. And I mean, it's ripping up here, right? I mean, bar count wise, we're now at probably 11 bars. 1, 2, 3, 4, 5, 6, 7, 8, 9. We're at 10 candles in a row, all bullish. Another reason I think we could, start to stall, but this is a nice candle, move a stop loss, trail today's price action. If you're long pound dollar, it's a great trade. I wouldn't short it, but if you're long, trail your stop losses and get knocked out with some good profit. New Zealand CAD filled the pocket. That was an easy trade. Leveled in here around 8,000. Now it's up to 8280. Let's see how high this can go. I think it's a big range. There's a low, there's a high. So low down here, high up here. New Zealand Swiss, similar to the other ones. There's my break even. I'm going to move these buy stops lower. I'm just actively looking to see what type of bottom formation I can plan. New Zealand yen, no trade. New Zealand dollar. Into some open space. I certainly got into this one early. Had my levels, got out near the highs. This was a break even. These were profits. It is what it is. I didn't get filled at the 50. What did I put in here? I should have just bought the damn thing at 5,500. It's okay. I did Aussie dollar instead at 60.20. This was fine. So where to go from here? Well, a pullback. We get a pullback. We go higher. This is open space back to 63, 6,400. But wait for a dip. Wait for a pullback. Okay, dollar CAD. I'm going to go here in just a couple minutes. Dollar CAD is heading lower. Totally fine. Where's my next trade on dollar CAD? Honestly, if dollar CAD comes all the way back down to like 3,200 or 3,000, I'm going to dollar cost average into that area and trade this back up to a range. Even if it's a 3,200 zone to like 3,800 zone, this is a multi-year range. So I'll play with that. Okay, dollar Swiss, making some fresh lows. Divergent, oversold. Looking for a bottoming formation, and just going to hang in there. Stay small, stay alert. Hopefully not a flash crash on the dollar. That would be, look, I've been trading currencies for a long time. I've never seen a flash crash caused by the dollar, but this could be that year. Bonds have broken a little bit. Dollar index is a bit of a sacrifice. Gold has just been the greatest thing ever. So crazy if it happens, but dollar Swiss, keep an eye on it. I said this last week. If the gold trade pivots hard where gold gets a correction, the Swiss is going with it. So if we have a big correction in gold to find that 200 moving average that I keep talking about, Swiss is going to do the same thing. So Swiss will pivot pretty hard on a gold correction. Just a matter of when. And the dollar yen, symmetry is close. And like I said, if, and I don't know, but if this is a head and shoulders, man, this could be one of the bigger trades to go short. If and again, I don't know if it's going to stay below this this neckline. I could see it as all head and shoulders typically do, is they get very messy and noisy around the neckline. But if this is the destination, I mean, if we had this conversation in 6 to 12 months, I wouldn't be terribly surprised if the dollar yen is at 120. So it's not going to be a fun trade for most Forex traders. But just calling the big picture, it's like this is a textbook head and shoulders. And if we're not super messy around the neckline, then yeah, I could see this measure move getting us to like 120. Okay. So, all right, everybody got to jump. I got a class in 1 minute. Hopefully it was enough top to bottom. Okay. Cover a little bit of everything, and see you tomorrow. All right. Thanks. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage, or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.